morning, Mark Soderberg with ADM Investor Services with your morning outlook for Wednesday, June 25th. Well, onward and downward just continues to be the prevailing theme here across much of the ag space and overnight trade. New contract lows in corn down another 4 to 5 cents. Soybean complex also lower, 6 to 7 lower now in the beans into new session lows. Meal prices off about $2, while bean oil is down about 30 points. A little more mix in the wheat. Chicago and Kansas City both down 2 to 3 cents, while Minneapolis is steady. A favorable U.S. weather outlook combined with growing expectations for Brazil's corn harvest are weighing on commodity valuations. Yesterday, AgriConsults, they raised their forecast for Brazil's second corn crop 10 million metric tons to 123 million metric tons, with a total crop estimate a massive 150 million metric tons, well above the USDA's forecast of 130 and CONAB at 128. If realized, this would far exceed Brazil's previous record production from 2 years ago, which the USDA has pegged at 137. Recall, the USDA did not change their Brazilian production forecast earlier this month, likely due to harvest delays of that second crop. Harvest is really starting to roll now, and I would expect to see some significant increases coming from the USDA. Energy prices, they've stabilized here a little bit and recovered overnight. Crude oil is currently up about 30 cents a barrel. There seemed to be some skepticism with the Trump administration's claim that the U.S. and Israeli bombings completely destroyed Iran's nuclear capabilities. For now, however, the fragile ceasefire agreement appears to be holding. U.S. dollar index is slightly higher, while U.S. equity markets are flat, working slightly higher now. Next Monday is the USDA quarterly stocks and acreage report. The Bloomberg survey shows traders expect very little change on the acreage side of this report, change from the March intentions. The average corn estimate shows corn acres coming in at 95.4 million. That's up only 100,000 from March. Virtually no change expected for soybeans at 83.5 million acres, or the all wheat forecast at 45.4 million. Corn stocks coming in at about 7% below a year ago at 4.625. Little change in soybean stocks at 975 versus 970 last year, while June 1st stocks for wheat, which is the final stocks estimate for the 24-25 marketing year, expected to rise about 20% from a year ago to 836 million bushels. However, that is very little change from the current USDA forecast. Ethanol production later today expected to come in slightly below last week's 326 million gallons that was produced. If realized, however, would be the fourth consecutive week where production is above the pace needed to reach the USDA corn usage estimate of 5.5 billion bushels. U.S. weather, largely favorable, good mix of warmth and moisture across a vast majority of the nation's midsection now into the first full week of July. In corn, really not a whole lot of support until $3.99 on the charts for the spot contract. That was the low from last fall. Good demand for U.S. corn and tight global supplies has continued to be viewed as old news as U.S. and Brazilian crop estimates continue to grow. Speculative traders are piling in on the short side. We had them sell another 7,000 yesterday, taking that short position up to about 205,000 contracts, which is the largest short now since August. July beans working on a fourth consecutive lower close. Same with November beans. Support below the market in July's 1032.5. Wheat also under pressure, giving back much of their recent short covering surge we've seen in the last couple of weeks. Econ today, they did raise Russia's production forecast to 83 million metric tons. That's in line with the USDA. Thanks for listening, everyone, and have a great day.